Ladies and gentlemen, welcome back to the channel. There is reason to believe Rezolve AI is about to make a dramatic move to the upside. And we're going to talk about why that is in today's episode. I am biased. I do own over $130,000 in this stock, and I'll explain why I'm so bullish in today's episode. But take a look at this right off the bat. The short interest in Rezolve on September 29th, which was released on October 8th, was 13.32%. The latest short interest reading that we just got shows 7.73% short interest. Okay, this is a decline of 27%. Short sellers do not want to short Rezolve. For a small cap company to only have 7% short interest? Hopefully you know what that means. If you don't, let me explain it. Small caps, their short interest vary widely, okay? But generally, short sellers short these stocks a lot. Now, Poet's another one that I really like, only has about 7% short interest, but let's look at some of the other AI stocks, okay? BBAI has an estimated short interest of 19.44%. Let's look at Tempest AI, okay? And I'm just throwing out some, examples to look at here. Tempest has a short interest of 19.32%. You get the idea. So 7% short interest in Rezolve is quite telling. Institutions are pretty bullish. Now, that's not why I am bullish on Rezolve. In today's episode, I will explain why that is. But first, hit the like button, subscribe to the channel if you have not done so already, and check that link out down below in the description of today's episode if you want to come join the trading community where we are going out finding stocks like Rezolve with massive upside potential and, in my view, limited downside potential, identifying, investing in, and executing on these opportunities. Now, Rezolve is one of many opportunities we're going to have in this AI revolution for the next 10 plus years. We are just scratching the surface. So come join us, link down below in the description of today's episode. But first, let's talk about this broader market, okay? Rezolve did not have a great day today, okay? Not at all. The markets did not have a great day either. The main reason for that, there's a couple, as we talked about before, but the FAA will cut flights by 10% at 40 major airports due to the government shutdown. Government shutdown is getting worse, the implications are getting worse, and the pain on the economy is getting larger. Okay, now you can see 10-year Treasury yields are dropping about 7 basis points today as Wall Street is growing more nervous by the day that the government shutdown will push us into a recession. Now, job cuts in October hit the highest level for the month in 22 years, Challenger says. Okay, 22 years. This is the highest month of layoffs for October. Now, this is not the highest Challenger jobs cuts we've gotten in 22 years. That would be like 300 or 600,000 at the height of the 08 recession. But this is the highest for October. So Wall Street, rightfully so, is getting more nervous here. They're saying, oh my gosh, if the government shutdown lasts another month, how's the economy going to look? They're getting fearful. They're getting scared. Now, we're not getting a lot of data like retail sales, consumer spending. We're not getting CPI. We're not getting GDP. We're not getting, all of your other data points that would kind of tell you how the economy is doing. So you're getting a lot of pressure on these smaller cap stocks. You're getting a lot of pressure on risk on areas. Now, even on a day like today, even mega caps are coming under pressure. Nvidia is down over 2%. Microsoft down about 2%. Google down over 0.5%. Bitcoin down at about $102,000, down about 2% today. Okay, and it's the government shutdown that is putting pressure on this market. Now, Rezolve actually has done quite well in the last couple of days in spite of the government shutdown. Now, yesterday we had good news. The ADP employment report showed the economy is or labor market is potentially doing okay with about 40,000 job ads. But then you get this challenger job cuts number today, and all of that kind of gets thrown into question again. Okay, so I will point out that Rezolve has generally done well in this volatile market. I know that it's relative. Rezolve has come down a lot, and that's where the opportunity at this stage comes back into play. Okay, and markets are just getting destroyed at the time of recording this video. Now, the reason I think Rezolve AI is about to make a dramatic move to the upside is, one, we haven't gotten any contract news from Rezolve in a while. We haven't gotten any really good news in a while, and that's partially why the stock has come under a lot of pressure. Okay, we haven't got any partnerships, we haven't got any contract PRs. We have been hiring a lot of prior senior executives from other companies, which looks great. Yesterday we hired a former executive from Microsoft to be the head of sales in North America. That looks great, but Wall Street really wants some good news to trade off of. Now, I believe, just again, via how long it's been since we've gotten a PR update or an ARR update, we're probably going to get one of those soon. Why? Again, Rezolve technically only has to report every 6 months. Rezolve has told us in the trading community, as we've reached out to them in recent months, that next year they plan to start reporting on a quarterly basis. So we will see if that happens. But for now, at any moment you're going to get a new ARR update. Okay, Rezolve's not, most likely, they didn't before, wait until earnings to give you the new, ARR guidance. So I think we could be getting some rather large news soon, just because we have not in a long time. Now, I do think inevitably the government will reopen. Okay, and that's the core of this. The government will reopen at some point, and stocks like Rezolve that are trading at dirt cheap valuations on recession fears are going to be the areas that benefit the most from that. Okay, Rezolve, let me put this into context. Rezolve owns a proprietary large language model that has beaten or performed in line with ChatGPT, Claude, all of your other large language models that cost hundreds of billions of dollars to make. Okay, Rezolve's whole company value is 1.25 billion. Let me put this into a little bit of English. Rezolve says they're going to hit 150 million in ARR by the end of this year, and they're going to hit 500 million next year. Assuming they hit those numbers, Rezolve is trading at a crazy stupid valuation. Crazy stupid low valuation. Okay? Take 1.25 billion, divide that by 500 million for next year, and you're looking at a price to sales of 2.5 for a company that is expecting to grow over the next 12 months 333%. That is crazy. Absolutely crazy. Now, at a $1.25 billion valuation, I would make the argument that Rezolve, just their large language model alone, is worth more than $1.25 billion. That would be my argument. Whether you want to give this a sum of the parts valuation or not, typically that's not how these things work. But 2.5 times sales for a company growing at over 300% or projected to grow at over 300% is what you call dirt cheap. Dirt cheap. It's kicked in the rocks. Like, nobody is looking at Rezolve. Okay, that's why the valuation is so low. There was dilution a couple of months ago. Obviously, that's not great, but there has been a general risk-off appetite in this market for a while now, and that's why the company is trading at such a low valuation. Now, the technicals, even though we broke below the 100-day moving average, you've been holding support at this trend line here. That's what you need to see. If you don't hold support there, then you're headed down to the low $3 range, and I don't think this would be a Rezolve specific thing that would get us to $3 per share, right? The valuation makes no sense already, let alone the stock to drop another 90 plus cents. But it could happen if the government shutdown continues and recession fears continue to rise. Now, Rezolve's RSI is lower today than where it was back in April of 2025. Okay, Rezolve's RSI today is at 36. Back in April, Rezolve's RSI was 47. Here's a 36 reading, a 36, a 38, 34 reading briefly. The RSI was around 38 roughly back then. Today it's at 36.84. The RSI is completely washed out. What does that mean? It stands for Relative Strength Index. So relative to itself, relative to other stocks in the market, Rezolve is at a very low point. Now, sentiment is very, very low as well in the stock, right? We look at this from time to time, but Rezolve over on StockTwits, I mean, it's bearish. Its sentiment score right now is bearish at 37, right? Yesterday it was at 36. Message volume is low at 38. Participation ratio is low at 28. It only has 10,000 people watching the stock, 10,391. That has not moved in a long time. So people are just not paying attention to this one. Okay. Now, you've started to get more and more attention around agentic e-commerce, with Amazon saying they plan to partner with companies for agentic commerce, that agentic commerce is going to be something that is with us for a long time. But you haven't gotten that round of hype yet in agentic commerce. And I think there is going to be a round of hype around agentic commerce. So when I put these things together, dirt cheap valuation, a company that is hiring senior executives from Microsoft, Accenture, and all of these other companies, that looks good. A government shutdown that is inevitably going to end, an economy I do not believe will be entering a recession, short sellers that just covered on millions of shares in Rezolve that do not want to be short in the company, I view that as bullish, a RSI that is crazy low, and the fact we haven't gotten any big news from the company in a while, suggesting anytime now we could be getting a new ARR update or a new contract update or something like that could be coming soon. These are the reasons why I believe a large upside move for Rezolve could be coming. And it could be one of these things, or it could be multiple of these things. Government reopens, boom, that's a big catalyst for Rezolve. ARR, new target, boom, that's a big catalyst. What do you think would happen if Rezolve came out tomorrow and said, we have already achieved 150 million in ARR before, target end of this year? Okay, that would be great news. What do you think if Rezolve came out and said, hey, we secured a $25 million ARR contract with whoever, Target, Meijer, Sam's Club, blah, 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 blah. Okay, that would be really good news as well. So something like that, government shutdown, opening again, anything like that is going to be seen as a much larger catalyst now, because the stock is so beaten down, so ignored, and so unloved. Okay, so that's kind of how I'm looking at it right now. As the stock has went lower and lower, the risk reward has gotten better and better. Now, I asked Grok, okay, what Grok thinks Rezolve will be worth a year from now. And obviously it says here, all of this stuff we already know, not really new information. You got TradingView, price target $10.58, consensus price target $9.50, HC Wainwright $9 price target, MSN tip ranks $10.79 price target. Again, we already kind of know that, but that implies 156% upside from the current price of Rezolve. Now, it says rationale for the consensus. Analysts project robust revenue scaling from 150 million ARR in 2025 to 500 million in 2026, supported by AI tailwinds. The targets factor in a forward PS price to sales multiple of 5 to 8, assuming continued execution. One outlier forecast at 60 cents appears erroneous or based on outdated bearish models and is not representative. Grok's take. If Rezolve hits its 2024 ARR target, the stock could exceed $12 to $15 per share, aligning with high-end estimates. However, missing guidance by even 20% could cap it between $6 and $8 a share. Monitor Q4 2025 earnings for updates. This is not financial advice. Blah, blah, blah. Even if the company missed estimates by 20%, you could still be looking at $6 to $8 in 12 months. Now, that's not as great as 12 to 15, or my estimates of closer to $20 or $30 per share by the next 12 months. But even $6 a share from current prices would be some pretty dramatic upside if you're buying the stock at today's levels in the $3.90 range. Just to get to $6 per share from here would be 52% upside, and to get to $8 per share from here would be 103% upside. Let alone you're looking at like $12 or $15. $12 in upside is 203%, and I have to zoom the chart out even more to look at this. $15 would be 282% upside for the stock. So the stock is already priced for not hitting numbers, or I think more likely there's just not a lot of people looking at Rezolve. Okay, I don't think people actually think Rezolve is going to miss. I think people are just not looking at Rezolve. They're not paying attention. And for all of these reasons, I think a large upside move could be coming. But I'm not a financial advisor. I'm not a financial planner. I have a lot of money in the stock. I have 33,550 shares, which times $3.92 puts you at about $131,516 invested in this one company. So, yeah, it's going to be I think, multi-million-dollar position one day, or it's going to be a six-figure loss easy. And my average cost is around $3.30 as I have averaged down over time. Okay, I started buying this stock in the $2 range, low $2 range, high $1.80, $1.90 levels. So, yeah, if the stock does fall further, it's an easy no-brainer for me. So let me know your thoughts on this down below in the comment section. Have a great rest of your day, and I will see you in the next one.